Now guys, I'm going to discuss the agenda of this S&P 500 technical analysis. This S&P 500 technical analysis, okay, is from September 11th, which is Monday, through September 15th, that will be Friday. And the first point of the agenda is the S&P 500 technical analysis on the weekly chart. So weekly chart, yep, there is something significant that has happened in case of the Dow Jones. Okay, not in the S&P 500, but in the Dow Jones. Okay, that I will explain. Okay, but in case of the S&P 500, the weakness is still there on the weekly chart. Okay, and weekly chart means the hawk eye view, the big picture. Okay, what is going to happen in the S&P 500 and in the entire US stock market in next 1 month or in a quarter or so. That is the weekly chart. The second point of the agenda of this S&P 500 technical analysis is the CPI, core CPI, inflation, PPI, Federal Reserve, and FOMC, Federal Open Market Committee. Okay, that the meeting. Now, next week, Monday and Tuesday, okay, there is nothing. Wednesday onwards, okay, we can say that the show will begin. Okay, from Wednesday onwards, okay, this is the most important, and there's a critical data, inflation, okay, data. It will it will be seen, okay, on this Wednesday morning. Then on Thursday the PPI data, and so on. Okay, and then on September 20th the FOMC, okay, the Federal Open Market Committee members, okay, they will they will decide whether to raise the interest rates or not. Okay, so that will also be there. So I will discuss all of this, okay, the possibility and the probability, okay, here. Now the third point of the agenda is the S&P 500 technical analysis on the daily chart. So weekly chart is the hawkeye view, the big picture. Daily chart means the short term picture. Okay, so through the technicals we will come to know, okay, what is happening on the daily chart. Okay, how the technicals are doing, whether there is a bearish movement or if there is a bullish movement, or if there is any probability of the bearish bullish movement, the moving averages crossover, and okay, slip, and okay, these things. Okay, as of now the S&P 500 particularly, okay, it is trading at these critical levels, okay, where we can expect some slip, okay, a slip to be formed. Okay, but and you know that if the okay, if there comes a slip, okay, in that case, that movement, if it's a bearish movement, then bearish movement will be very heavy. If the slip forms in the bullish movement, then the bullish movement will be okay, it will be very heavy, right? So it all depends on the slip. So that I will discuss, okay, in the third point of the agenda. Then comes the last point of the agenda of this S&P 500 technical analysis. And as usual, in the last point of the agenda, okay, I will talk about, or I will discuss, okay, this the movement of the probable movement of the S&P 500 from September 11th, which is Monday, through September 15th, that will be Friday. Also if you have subscribed to my channel, YouTube channel, for last many months or years, then you know that I discuss the probable movement in this part, in each and every part, and I share tons of valuable information that you might not find anywhere. I have created sections in this the video. Whichever section you want to watch, you can watch. Whichever section you want to skip, you can skip. However, I strongly recommend to watch the entire S&P 500 technical analysis. This is the entire YouTube video. Okay, so that you know you can gain tons of valuable information, and you will know, okay, what is expected to happen. Okay, right? And guys, I would like to add a small disclaimer to this S&P 500 technical analysis, that this S&P 500 technical analysis is not a financial advice in any form or in any manner. And because I do not know what you are going to trade into and how you are going to trade, and your technical knowledge and your stock market knowledge, that is why, okay, whether you are making 20% profits within a day, or you are seeing 20% losses within a day, okay, whatever profits and losses are there, these profit and losses are all yours. So if you visit my website, I've given the link in the description of the video and also in the comment section. Then I have started posting, okay, these are daily updates, but only after the week is over. Okay, so these are not in the real time, okay, but I post these updates so that you can read and you can gain some valuable information. Okay, there is a tons of valuable information that is present, okay, in these daily updates, okay, that I've given to my Patreon community members. Now guys, I'm going to discuss the first point of the agenda of this S&P 500 weekly technical analysis, and this is the weekly chart. Okay, so weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay, now let's first analyze the candle itself. If you look into the candle, Okay, good bearish candle. I will not say very heavy bearish candle, but I will say good bearish candle. Okay, the only problem with the candle is that this candle has failed to close below the open of the previous candle. Although it came down, okay, but there was a reversal, and they have used Apple, Microsoft, and it was Amazon. It's a bearish candle. Yes, there are bearish sentiments, but this bearish candle is not heavy bearish candle, okay, in a manner that it can bring more fall or sudden fall or give a gap down open and then a heavy fall. Okay, that may or may not happen, but through this the bearish candle, that is not clear. Okay, now there is one more thing. Okay, and if you notice, okay, let me show you. This is very important. If you notice this particular candle, this was a bearish candle. This candle has closed below this the moving average. Remember, we are talking. Okay, I'm talking about the weekly chart. This candle has closed below this the moving average. Then the next week, what we have seen? Next week we have seen, okay, this and open. It tried to move up and then it failed. Right. So this is the magic of the moving averages that I have. So I'm using the modified moving averages. Okay, not the usual ones. Okay, so now if you see that the closing of this moving average, okay, it was sorry, closing of the candle of this S&P 500 on the weekly chart was below the moving average. Okay, this indicates that there is weakness. There is weakness in the S&P 500, right? But this weakness is not very heavy. Means we will not say that there is heavy weakness. It's just a weakness. Okay, this means that even if the S&P 500 try to move up, then also, okay, there are very good chances that it will give up and it will come down. Okay, only and only if there comes a manipulated movement, or if there comes some news that is supported to the stock market, the S&P 500 will be able to move up and sustain. Otherwise, it's not possible. Not possible because of the 4471. Okay, now the 4471 is there in the picture. Okay, I will discuss the 4471 later. So as of now, okay, this is what this the candle is indicating, right? But yes, more weakness. Okay, we can expect more weakness in the S&P 500. Okay, but it does not discard, or it does not diminish the bullish chances. Okay, it can still allow some bullish movement, some, okay, a little reversal. Okay, but remember, S&P 500 is not going bullish until and unless it clears 4527 and 37. Okay, as long as it is trading below 4527, 37, it will remain bearish no matter what. Okay, doesn't matter whether the technicals are saying too bullish or not. As simple as that. And for those, okay, who are watching this the very first time, 4527 is my calculated support and resistance level. Okay, you are not going to find this, okay, anywhere as such. Anyways, now let's talk about the technicals. Yes, technicals. Okay, that is, if you look into the technicals part, moving averages are still supporting the bullish trend. Ichimoku, okay, and Bollinger Bands, fine, supporting the bullish trend. Then what's the problem? The problem is the MACD. If you look into the MACD on the weekly chart, 1, 2, 3, 3 consecutive weeks, 3 successive weeks, okay, MACD is still bearish. Okay, means weakness. If you look into the stochastic RSI, okay, there is a mild crossover, okay, very little crossover, but still it is trading in this the bearish territory. Okay, so we can say that there is a weakness, but this weakness is not heavy, because the principle says that whenever the MACD and the stochastic RSI, they are aligned in the same direction, then only we can expect very heavy movement in that direction. As of now, okay, there is a little change, because if this candle would have closed below this the red one, or below the open price, then definitely, okay, there this change was not there. Okay, anyways, okay, not sometimes, but most of the times, okay, they engineer it this way. Anyways, so this means that although, okay, technicals looks bullish, but at the same time the MACD and the stochastic RSI, they are opposing the bullish movement. Okay, this means as of now the and considering all of the technical indicators, we can simply say that on the weekly chart the S&P 500 is only 60% bullish, only 60% bullish, and it is not absolutely bullish, it is only 60% bullish, right? It's clear. Now we will look into this the daily chart of the S&P 500 to see, okay, that whether there are any chances that the S&P 500 can gain, okay, this the bullish movement or not. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And guys, there is one more thing, that if you also want to learn about the technicals, the technical movements, and if you also want to predict, okay, the movement of the S&P 500, the movement of Dow Jones, any stock, any index, the movement of the entire US stock market, okay, then I have this the program, that is the S&P 500 knowledge transfer program, or you can simply say stock market knowledge transfer program. Okay, because whatever I'm going to teach here, okay, this is applicable to any stock, any index, not just S&P 500, but to Nasdaq, QQQ, okay, Dow Jones, or any stock. Okay, so I will teach the movement, the hacks, the strategies, the trend, the analysis, the manipulation, okay, and technicals, predictions, support and resistance levels, and much more. Okay, so through this program you will learn, okay, a lot of things, and you will be able, and you will become self-reliant, so that in future, okay, you can trade all by yourself. Okay, you will come to know, and I will give you the technicals. Okay, I will share you the modified values, and I will teach you, okay, that how the technicals work and how to predict the movement, okay, each and everything. And this is the link to my Google spreadsheet. So in this the Google spreadsheet, you will see that everything is mentioned in very detail, okay, what I'm going to discuss, each and everything. Okay, and this is the options trading. Okay, options trading calculator. Okay, calculate delta, theta, vega, gamma. Okay, and predict the price movement. Okay, and predict the movement of the index or the stock based on the options. Okay, or through the options. Okay, this is the reverse engineering. Okay, so live calculations, live everything. Then I will give you the support and resistance levels. Okay, and deduce the trend, and knowing the things even before they happen in the stock market. Okay, that is also there. Each session will be of 2 hours. Okay, and these are the terms and conditions. Okay, so many people have participated in okay, in my S&P 500 or the stock market knowledge transfer program. Okay, so guys, whenever you're ready and you want to participate, then this is my email address. Okay, you can send me an email. And guys, I've given the link to this program in the description of the video and also in the comment section. Now guys, I'm going to discuss the second point of the agenda of this S&P 500 technical analysis, and the second point of the agenda is the CPI, the core CPI, PPI, and the inflation. Okay, and the upcoming Federal Reserve Open Market Committee meeting and the decision. Okay, rate hike. So far all of the news channels, all of the website, all of the analysts, and everyone is saying that the Feds are not going to raise the interest rates in this month. Fine, okay, let them say whatever they want to say, but we will stick to what the Federal Reserve Chairman himself has said. So this means that recently we have seen what? We have seen PCE, PCE and core PCE, core PCE. Okay, this is one of the favorite, okay, this indicator, okay, that the Feds they use. And recently we have seen that after a decline, okay, the core PCE and the PCE has increased. Okay, this was supposed to be a bad news for the entire stock market, but no news channel has published this the information. It's only a few, and some publish the information after 4 or 5 hours or after the closing of the stock market. Okay, because you know that there are only few, okay, who run the stock market. Okay, and they decide what to be published and what not to be published. Okay. Anyways, okay, so core PC data. Other than that, then came the non-farm payroll data. Non-farm payroll data further, okay, moved up in, okay, and it has confirmed that people are still getting the jobs. Okay, and the job market is still hot. Then recently came this the initial weekly jobless claims. Okay, this has further confirmed that because less number of people have filed for the weekly jobless claims. Okay, so means overall we have seen that whatever data was published recently, okay, it was supportive of the inflation. It was saying that the inflation is going to move up. Okay, and if that was not all, then recently the Saudi Arabia and Russia has confirmed that they will keep this the shortage of oil. Okay, means they will produce 1 million barrels, okay, less oil per day, and this will be there until the end of this year. This means that they are going to put a lot more pressure on the economy. Okay, means the fuel prices will be up, fuel prices will move up. When the fuel prices will move up, then each and everything is linked directly or indirectly to the fuel prices. then everything, okay, it will move up. When everything will move up, in that case, the inflation will move up. Simple. So after the news was out that the Russia and Saudi Arabia, they are going to keep, the low supply of oil, okay, in the market. So it was clear that the inflation will move up. Now let's talk about the September 13th. Okay, the date might not be suitable for many, because it's 13th. Okay, anyways, let's not talk about this. So September 13th, Wednesday morning, 8:30 a.m. Eastern time, US and Canada. Okay, US and Canada Eastern time, 8:30 a.m. The CPI and the core CPI data will be published. Okay, CPI and the core CPI data. Now, last time we have seen that after a continuous decline, the core CPI and the CPI, okay, this is the chart of CPI. Okay, it hit this the 200 months moving average, hitting the 200 months moving average, and it was trading well beyond the technical, so it has given a reversal. Okay, from 3 to 3.2. Okay, it has given this a small reversal, 6%, 6.5% reversal. Okay, now if there comes just one more reversal, one more bullish reversal in the inflation, okay, considering all of the recent data, we can expect that there might be some bullish reversal. If there comes just one more bullish reversal, okay, in this inflation, in that case, in the month of September itself, the Feds are going to raise the interest rates, no matter what these market manipulators are saying, or what they are asking the news channels to publish, or the analyst. Okay, it doesn't matter. Feds will raise the interest rates, because they will be on a very, very strong probability that, because all of the data, okay, it is just like giving a bullish inflation reversal, confirming, okay, this the inflation, that the inflation is going to move up. So this will happen. Okay, now when the inflation will move up, then its impact will be seen. And September 13th is CPI and the core CPI. September 14th, okay, it will be PPI, producer price index. Okay, so if they do not give any reaction to the CPI and the core CPI, even if it comes bullish, then the PPI data will be published. And if the PPI data comes also bullish, in that case, let's see, okay, whether they will still give the reaction or not. Okay, because see, it is not us who are controlling the market or who are driving the market, it is them. Okay, they decide what to do with the stock market. Okay. So now, so generally what should happen is that once there comes a bullish reversal in the inflation, then the stock market should come down heavily, very, very heavily, like 4% or 5% fall within a day. It should be there. Okay, in the S&P 500 and Dow Jones, everywhere, this must be there. And if you are my Patreon community member, then you need not to worry about this, because one day before, on Tuesday itself, okay, I will tell you that what is the possibility, probability. Okay, and on Wednesday morning, okay, I will give you a detailed analysis. Okay, once the data is published, even before the open of the stock market, so that you can make appropriate changes in your trades. Now guys, I am going to discuss the third point of the agenda of this S&P 500 technical analysis. And the third point of the agenda is the S&P 500 technical analysis on the daily chart. Let me write it down. Daily chart, D as in daily chart. Okay, so daily chart means that the one candle represents one day, not 1 week or 1 hour. One candle means one day. Okay, now if you look into the candle, this is the last candle. Okay, it's a green candle. Okay, okay, but it's a thin green candle. Secondly, the closing of the candle is below these the moving averages, indicating that the S&P 500 has struggled a lot on Friday. Okay, and after struggling, okay, means although it managed okay, to sustain above 4449, okay, but at the same time it failed to clear the 4471, and it came down, okay, intraday. So it remained between 4471, okay, and 4449. Just plus minus 1 or 2 points were there. Otherwise, okay, it was okay. It was as per the predictions, okay, as per the expectation, nothing new. Okay, now, so the candle is thin green candle. Secondly, the closing of the candle is below the moving averages, indicating that although it's a thin green candle, but it is filled with the bearish sentiments, or it is filled with weakness. As simple as that. Right? So this is the interpretation of this candle. Now, okay, let's look into these technicals. If you look into the technicals on the daily chart, okay, 1 2 3 4 5 6, okay, yep, everything is like 50-50. See, the most important part of this technicals here, stochastic RSI is already bearish. MACD looks like that the MACD is going to be bearish as early as on Monday. If there comes a red candle or a good red candle, then definitely on Monday we will see a crossover in the MACD done. Okay, once the MACD goes bearish, stochastic RSI is already bearish, then what will happen? Then there will come this movement, bearish movement, and as of now what is happening? Okay, reversal, and this is how, okay, it is going to work, right? So okay, MACD potentially, okay, or most likely it is going to give a crossover on Monday. If not on Monday, Tuesday. So we need to look into this, the movement, because if there comes an unexpected bullish movement on Monday, okay, and or on Tuesday, in that case this will not give a crossover, rather it will simply slip and it will remain bullish. In that case also, okay, stochastic RSI might also try to change the direction, or it might change the direction. Okay, so anyways, if you're my Patreon community member, okay, so on the daily basis I will let you know, okay, if this is happening or if it is not happening. Once it happens, then yes, bearish. Okay, this part is clear. Now the other important part is that if you look into the moving averages, okay, recently we have seen that the moving averages have given this the bearish crossover. Okay, we have seen an engineered movement here, right? And that has actually helped the S&P 500 to give a a bullish crossover. But now again we are seeing that these moving averages are coming closer. Okay, this means that if there comes a good or a heavy fall on Monday, okay, in that case on Monday itself there are very good chances that these moving averages might give a crossover. If not, then on Tuesday there will be a crossover. When the moving averages gives a crossover, bearish crossover, MACD is bearish, stochastic RSI is bearish, then be ready to see a very heavy fall. Very heavy fall to up to what? Up to 4291. Okay, the fall will be there. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you're looking for the daily updates, the daily analysis of the S&P 500 from Monday through Friday, then you can join my Patreon community. And it's not just about these daily updates, okay, I give from Monday through Friday, but also I give the stock market opportunities in the premium stocks of the US stock market, okay, minimum 5 to 10 every week, right? So let me tell you that how you can join my Patreon community. So guys, in order to join my Patreon community, I have given the link in the description of the video and also in the comment section. So when you follow that link, then you will see that this is my Patreon page. And on my Patreon page, you will notice that there are these the two levels, two tiers. Okay, so there is no difference as such, okay, in these two tiers other than the geographical location. So this one is the daily S&P 500 updates for non-US and Canada residents. This one is daily S&P 500 updates for US and Canada residents only. So when you subscribe, okay, for either of these, then you will get the daily S&P 500 updates, the daily analysis of the S&P 500 from Monday through Friday, as well as the stock market opportunities, minimum 5 to 10 every week in the premium stocks of the US stock market. And guys, if you notice that many people have joined my Patreon community for last many months, okay, and they are getting these daily updates, the daily analysis of the S&P 500 from Monday through Friday, each and everything, as well as these the stock market opportunities. So guys, whenever you want to join my Patreon community, then you are welcome, and I've given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the fourth point of the agenda, fourth and the last point of the agenda of this S&P 500 technical analysis, which is from September 11th, that is a Monday, through September 15th, okay, that will be Friday. Now, so one more thing, okay, what we have seen on this the weekly, on this daily chart is that the S&P 500, 50-50, okay. On the weekly chart of the S&P 500, we have seen it was 60% bullish, but on the daily chart, we have seen it was 50-50. Yep. Now, okay, a few things that you must remember, as I mentioned earlier. Number one is Monday, Tuesday. Monday, Tuesday, okay, the movement of the S&P 500, okay, technically, if I say technically, so technically it should not move up, or it should not give any good bullish movement. Rather, it should struggle and it should come down. Technically, that is the thing. But because okay, the point number two is that on September 13th, CPI and the core CPI data will be published. This means that uh, this is a kind of situation where the market manipulators, they can come in open, okay, in broad daylight. They can give an unusual movement. This may be bullish movement, maybe bearish movement, depends on their mood. Okay, because see, they only have these 2 days, Monday and Tuesday, because once the data is published on Wednesday, and if the CPI core CPI data goes against the market manipulators, means if it goes bullish, in that case it will confirm that the inflation is still holding. Okay, it is giving and it has given two successive bullish reversal, means Feds are going to raise the interest rates in this month only. And in that case, market manipulator, they won't be able to curb down the information. Okay, because even people, okay, they are very much aware about this logic. Okay, this means that the market manipulators may try to give an unusual movement on Monday and Tuesday. If there comes an unusual movement like bullish movement on Monday and Tuesday, okay, in that case, this clearly means that they are very much afraid, or they are very much afraid, okay, of this upcoming data, and they are trying to create a trap. Okay, so why I am saying trap? Because in order to go bullish, 4527 is the condition. Okay, 452737, this is the condition. Without breaching and without sustaining above this the level, okay, the S&P 500 is not going bullish, and not just S&P 500, but the entire stock market is not going bullish, as simple as that. Okay, so they can try to create this scenario, okay, that everything is good, news channels will publish some good information or something positive, okay, that everything will be good, everything will be well, go and buy, okay, and these things. So you must be very well aware, okay, of these things, and just be careful, right? September 13th, CPI and the core CPI data will be published, okay, and only after September 13th, okay, we will come to know that, means not exactly 100%, but the true movement, okay, it might be there, okay, only after September 13th, right? Because once the CPI data is published, then it will be very much clear whether the Feds are going to raise the interest rates in this month or not, right? If they are going to raise the interest rates, then there is no more bullish movement, okay, it's all gone. Rather, it will go bearish up to what? Bearish up to 4291, and not just 4291, it will go bearish up to 200-day EMA. Where is 200-day EMA? 200-day EMA is approximately 4 okay, so it has increased, to 4247, 4247. Okay, this is there. Okay, and even, okay, it can, if the selling accelerates, in that case, even below that, like 4185, 4195, it will be there. Okay, this is there. Then yes, number 3 is the PPI data. The PPI data will be published on Thursday. Okay, if the CPI data goes bullish, okay, and confirms that the inflation is holding, and if the PPI data also confirms the same, in that case, yes, Feds are like, most likely they are going to raise the interest rates in this month itself. Okay, I hope these 3 things are clear. Okay, yes, number 4, okay, that you must be very well aware of this thing, 4527, 4527 slash 37. Okay, this is my calculated resistance zone. Okay, S&P 500 is not bullish, will not go bullish, will not be bullish in any form or in any manner until and unless the S&P 500 clears and sustains above this the zone, and it must give 2 successive closings above the zone to confirm that this is not a trap. Clear? Okay, now let's see, okay, what the S&P 500 is expected to do, and what kind of movement. Before that, okay, let me show you the Dow Jones, because Dow Jones is giving tricky movement. It was actually this weekly chart. Okay, on the weekly chart we have seen, okay, again very heavy candle in this Dow Jones. Okay, but it managed to close above the moving average. Okay, so it closed below this moving average, but it managed to close above this the moving average. So closing below this moving average, just like this candle, was required in order to see more bearish movement, more fall. Okay, but because now it has closed just above this the moving average, okay, This means that the Dow Jones can give some bullish sentiments, or some bullish, or can try to give some bullish movement to the S&P 500. Okay. But at the same time, because it is already trading below this, the moving average, this means that there is weakness. So Dow Jones may try to give the bullish movement, but it will not be heavy. As simple as that. Bullish movement may be there, but it will not be heavy. As simple as that, right? So this is with the Dow Jones. And one more thing, okay, with the Dow Jones, and that is there on the daily chart. Okay, if you look into the Dow Jones, then the moving averages are clearly bearish, right? And kind of slip is there. Okay, so and also the closing of the Dow Jones on the daily chart, it was below these the moving averages. Okay, this means that if the Dow Jones try to move up on Monday, and if it struggles, and if it remains below the moving averages, in that case there are very heavy chances, very good probability that the Dow Jones is going to give up. And when the Dow Jones will give up, in that case the entire US stock market will give up. And if you notice that even my these are updates, pre-market update, first, second update, and the final update to my Patreon community members, I always include the Dow Jones, because Dow Jones heavily influence the movement of the entire US stock market. That is why, okay, I always consider the Dow Jones along with the S&P 500, and this is how, okay, we are able to get very precise movement updates and predictions. Okay, so just keep an eye on this Dow Jones, and if you are my Patreon community member, then you need not to worry about that, because I will include that thing, okay, in my updates. Okay, now comes the probable movement of the S&P 500, okay, in the coming week, that is from September 11th through September 15th. One thing is clear, that as of now I cannot confirm whether there will be a gap down open, okay, or there will be a gap up open, gap down, gap up open. Okay, so last week I mentioned that once the S&P 500 opens, either there will be a gap down open, or irrespective of any open, there will be a bearish movement, and it was there. Okay, but for the next week, okay, I cannot confirm, and the reason is that it is holding above 4449, but this 4449 is applicable only until Monday. From Tuesday onwards it will change. And also in the bull side, it was struggling to clear 4471. Yes, 4471 will be there for the entire week. Okay, maybe until Thursday, I guess. Okay, it will be there. So the Dow, the S&P 500. Okay, so irrespective of any open, okay, irrespective of any open, if the S&P 500 remains below 4471, okay, even if it try to give a bullish movement, but it struggles and it gives up, and if it remains below 4471, then what will happen? In that case, it will come down. Okay, on Monday it can try to sustain above 4449, fine, but on Tuesday onwards this level will change. Okay, and this is through the lower level charts, so this level will change. Okay, and then whatever will be the value of the new level, then accordingly the S&P 500 will have to deal with that. And most likely that the value of the new level will be around 44, it should be around 445 something, 4455, maybe 58, maybe 59. Okay, so I will update you, okay, on Tuesday in the pre-market update. Okay, on the Monday in the final update. Okay, what will be the value, okay, as of now, but on Monday 4449. Okay, so this means that okay, if the S&P 500 remains below 4471, then it will give up. Okay, or if you see that it is trying to move up, but it is struggling around 4471, and still it is trading below 4471, but at the same time it is also not giving up. Okay, in that case what will happen? In that case it will remain suspended, like up down, at least until Wednesday morning. Wednesday morning, the S&P 500 and the entire US stock market will be under obligation to give a movement, either bearish or bullish, but it will have to give some movement. Some movement must come, bullish or bearish, but it must come. Okay, so this will be there. Now if the S&P 500 somehow, not somehow, but I will say through manipulation only, otherwise there is nothing. Okay, if the S&P 500 is managed to sustain above and to move above 4471 on Monday, okay, in that case what will happen? That this the bearish the crossover, this will not happen, right? This crossover is not going to happen, and it might form, okay, a bullish slip. Okay, so this will be subjective. So actually I need to see, okay, the values of these are moving averages, and then the closing on Monday, then only I'll be able to confirm, okay, whether the bullish slip is going to form or not, or if the effect of the bullish slip will be seen or not. Bullish slip means bullish movement. Okay. So if it is able to sustain above 4471, and if the bullish slips comes into the picture, in that case further, okay, a bullish movement up to 4000. First it will be 4497. Okay, in between there will be, you know, some resistances. Then it will be like 4512. No, 4517. It was there last time also. Okay, 4517. Okay, or so maximum up to that level. But again, okay, the 4527 okay, remember this particular level, this particular zone. S&P 500 is not going bullish until and unless it starts to trade above this the zone, and it sustains above the zone. Okay, even if it try to give a bullish movement, moves up, but if it remains below this, then also it will be bearish, it will come down, simple, nothing else. Okay, anyways, yeah, okay, here this means that if it gives, okay, a manipulated movement, if a manipulated movement comes on Monday, in that case we can expect that the manipulated movement will be there on Tuesday also, because the manipulators have only 2 days, Monday and Tuesday. Okay, from Wednesday onwards the things will be out of control, okay, out of their hands. Okay, so in that case we can expect like 4517, 4516 or 17, okay, up to Tuesday. Okay, okay, maximum. So you must be, you know, very much careful, okay, with this thing. Now if the S&P 500 remains, yes, there is one more thing. If there comes a decline in the CPI data, or in the core CPI data, and this decline must be significant, okay, not 2%, 3%, no, this must be significant, like 10%, 20% decline in the CPI and the core CPI, confirming that the inflation is coming down. In that case only, that will be the only case when we can expect that the S&P 500 can breach the 452737 and the zone. The only case. Otherwise it's impossible for the S&P 500 to even means to reach on to hit 4527. Okay, or we can simply say that technically it is not possible for the S&P 500 to breach 4471. Anything beyond 4471 is an engineered move, it is manipulated, because technicals are not supporting that move or that movement, right? Okay, so I was discussing this point. Yeah, 4471, 4497, and this thing. Okay, and this will remain like this. Now if the S&P 500 remains below 4471 on Monday, it try to move up and it gives up, or on Monday for any reason there comes a bearish movement, in that case the chances are the MACD will turn bearish. Okay, moving averages may or may not give the bearish crossover, but the MACD will turn bearish. Okay, now once the MACD turns bearish, then from Tuesday onwards, because now the MACD is bearish, stochastic RSI is bearish, we can expect that any bullish reversal will be very restricted, very limited, rather there will be the bearish movement. Okay, if on Monday if there comes a good bearish movement, and if the moving averages gives a bearish crossover, and also MACD is bearish, stochastic RSI is bearish, moving averages, okay, bearish, this means that bearish movement, simple, nothing else. Okay, no more bullish reversal, just the bearish movement done. Okay, so Monday will be, you know, very much decisive. It will decide, okay, the movement of the S&P 500 on Tuesday. And based on the movement, if there comes already, okay, a fall even before the CPI and the core CPI data, then the impact of the CPI and the core CPI data won't be much on the stock market. Okay, then it depends, like, okay, where it is, the S&P 500, where it is heading to. Okay, now once the S&P 500 comes down, and once it breaches 4425, okay, in the bearish side, once the S&P 500 breaches 4425 and starts to trade below 4425, then it will go bearish. Means then it will enter into true bearish movement. There will be the true bearish movement, right? And this true bearish movement will further, we will see an accelerated bearish movement once it clears 4396. Okay, then there will be further accelerated bearish movement, very heavy, even a gap down, okay, it will be there, and a condition open equal to high condition will be there, means there will be a gap down open, it will open immediately, upon open it will give up, that kind of condition. Okay, and yes, until Wednesday, okay, we have 4355 in the picture. Okay, 4355 can try to give the support until Wednesday. Then on Thursday onwards this will change, okay, it will increase to like 4370 something. Okay, it will change from Thursday onwards. Okay. Once the S&P 500 clears the Ichimoku cloud, it closes below the Ichimoku cloud on any day. Once it clears the Ichimoku cloud, closes below the Ichimoku cloud, then this will be the resumption of the long term bearish trend, not short term but the long term bearish trend. It was coming down, it was about to hit the Ichimoku cloud and to come this side, but in between it gave this the movement. Now second time it is coming down, second time, now there are very good chances it will hit the boundary of the Ichimoku cloud, or it can even breach the Ichimoku cloud, provided that the S&P 500 gets the support from the inflation. If the inflation gives a bullish movement, okay, in that case that will be there. As of now they are trying to keep the bullish sentiments, okay, through the Dow Jones, okay, but in the S&P 500 the sentiments are still bearish. Okay, and let's see, okay, how it goes. But on Monday, okay, in my final update, okay, I will clear most of the things, okay, where the S&P 500 is heading to for the rest of the week. So guys, if you have not yet joined my Patreon community, then you can join my Patreon community and you will get the daily S&P 500 updates, the daily S&P 500 analysis from Monday through Friday. Okay, as well as minimum 5 to 10 opportunities in the US stock market, in the premium stocks of the US stock market. And guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you have liked this video, then hit like. And if you have any questions that you want to ask, then please feel free to ask your questions through the comment section. Okay, and I have given the link to my programs, okay, 30% returns in 1 year, the S&P 500 or the stock market knowledge transfer program, okay, that is there. So I've given the links to these the programs in the description of the video and also in the comment section, so take a look. Okay, and if you are interested or if you have any questions, then I've given my email address there, so you can simply drop me an email. So guys, this was my S&P 500 technical analysis for the next week, that is from September 11th, which is Monday, through September 15th, that will be Friday.